Welcome back, guys. Nico Picasso here with you. Today, I'm going to make this video just to show you the update of the indicator right here. I think it's very helpful. This one right here, EBL, Enigma, Boss Logic, select higher time frame. I'm going to walk you through my settings quickly. Bullish line in blue, bearish line in pink. This is my buy line, this is my sell line, and this is basically I remove this because it doesn't work, I think. And my key time frame is the 30-minute time frame. I remove the arrow and I show the line. I extend the line to a maximum so I can see it. So the settings here on the 30-minute time frame is basically going to identify the break of structures on that time frame so that me, because I like this lower time frames, such as the 1 minute or the 5 minutes, even though I'm on the 1 minute or the 5 minute, I can still find my key levels on the lower time frame based on the break of structures identified on the 30-minute time frame, for instance, right? And this is gold today. Okay, so let me just quickly go on the 30-minute time frame because I know it looks confusing with all the lines, but you have to filter out the noise. And the way you have to do this is to take it one candle at a time. If we are on the 30-minute time frame and the price, you can see the day started here on the Asian session, right? Asian kill zone, this is acceptable to trade. And then you have the London kill zone, we're still in the London session and then the US session. So how would you approach this? Because all these lines, they are representing break of structure from the past, from today, So how are we using this? So for example, if you look when the price was here today at the highest level, we had a red line that we can see on the 30-minute time frame. Now, if I move lower on the lower time frame, we can still see these red lines. So right now we're on the 15-minute time frame. I'm gonna move lower, and then you can see we can still see this red line, right? So it allows you to have those key levels, and then now you're gonna use basic logic, right? The market is making lower lows, right? Lower highs, sorry. And on the Asian session, we are retesting a bearish break of structure key level. You take the sell trade, right? Let's say you take your sell trade on the line here. Your stop loss maybe goes above these highs, depends how you want to put it. It's up to you really. If you go on a 1 minute time frame, you might have a little bit more structure, like a double top pattern, for example. On the 1 minute time frame, you notice right now, we don't see the lines, right? Why don't we see the line? It's because again, the indicator is trying to adjust based on the time frame. So if I go on the 3 minute time frame, now we see the lines will be showing up. So you understand what I'm showing you here. I'm showing you that the indicator is not perfect. Okay, so on the 3 minute time frame, we can see a little bit more structure here on the Asian session kill zone. We can see we have the red line here, we have a blue line here. But what is more obvious? Is it more obvious to take a buy trade? Is it more obvious to take a sell trade? How do we know what line to follow, right? So we look at the market structure. What are the candles telling us? The candles are showing us here that they are most likely to create lower highs. If they are making lower highs, then we are going to go with the sell trade, right? And then we can see the market drops a lot, right? Now, let's say that you fail to trade on the Asian session, right? On the London session, let's go on the 5 minute time frame because not many people uses the 3 minute time frame. On the London session, the market start to drops. And then, so obviously you do not want to, because the market stops here, for example, on this candle, you do not want to buy here. Always try to buy when the market is showing you that is changing direction. So if the market is going down towards a buy line and then the market is starting to go back up, then you can start to consider looking for buy trades because that structure here is going to probably be like a break of structure for the opposite direction, right? So what do I mean by this, right? So look, this is the bottom of the Asian session, of the London session. Observe how the market goes towards this buy line and then it returns back above this buy line, right? It goes above. Look left. What do you have? You have micro break of structures on the lower time frame, also giving you key levels. So you can use this as your potential buy area when the market comes back and bounce in this range to take your buy trades. And as you can see, this would give you the opportunity to trade back into the range of the Asian session, right? With a stop loss that you can choose again from this low or these lows, right? And you can go and target the Asian range, which is right here, which is the opposite line, maybe the sell line here, or even here, right? We can see again, the market goes to the blue line, it returns below the red line, and then it builds the opposite structure. Observe carefully, right? We have the red line, which is here. This is a bearish inside bar. A bearish inside bar indicates a lot of the time in a key level that the market is a probability that the market is going to go bearish, right? So now when when this candle body closes below this candle low, it's a confirmation of a bearish break of structure, which is based on the 5-minute time frame. But we also have the break of structure that we can identify with the line based on the 30-minute time frame. So we can see here, that's another great sell area. We can sell right here, and then we can put our stop loss above these highs, for example. And then we can see now the market start to drop, and then now we can just trail our stop loss, right? And this is just one example. I've been backtesting this. I like US 30 today. I had an opportunity here. I took this, for example, and I was just testing it out, and then it worked out. Look, very easy. Then the market changed direction, and then you can see the market breaks below. Look at where that's the first area where they respected the bearish break of structure. They went above it. They create a bearish break of structure on the 5-minute time frame. They break below again, new break of structure. They come back and retest right here. That's your sell opportunity in this range right here. Stop loss right here, and then you'd be in this trade right now, right? Why? Because the logic is very simple. The market is bearish here. The market is retracing. This is a lower high that is being created below multiple break of structures. So I'm just trying to help you understand that don't be confused by all the lines, and you have to use some logic to use it, right? Let's look at NASDAQ. NASDAQ on the Asian session, we can see the market come and retest this bullish break of structure based on the 30-minute time frame. Okay. Now, if you look, we have a higher low, right? Because this doesn't exist yet, but the market is respecting a higher low. You take the buy trade, right? You take the buy trade. And again, because we are not trading guarantees, we are trading probability, we're risking 0.50%, 1% of our account, and we hope for the best. The market goes in our direction. We get easily more than 1-to-1, right? The market returns lower. It comes back and retests this level one more time on the London session. It provides another 4 hours at least, right? And then again, the market changes direction, comes back again into the buy line. So maybe here, you can take the breakout, the sell, right? You can take the buys, right? You see how they move back up here. They break above this high, which is a bullish break of structure, and then they retested it here. So all those, you want to add all this understanding together because it's going to help you be more accurate, and it gives you a bias. It filters the noise, right? Because the lines tells you buy and sell, and then you are using the lower time frame, such as the 5-minute, to double confirm if also on the lower time frame you get a bullish structure or bearish structure according to the direction of the buy and sell trade, right? So I just wanted to make this video quickly. This is Euro JPY. You can see this one was cleaner than the gold. Gold, we had a lot of lines. This one, very easy. We have one line here. The market comes and retests it. Very clean setup, right? Very clean setup. And then the market goes down. And then here, look at how they break below this break of structure on the 30-minute time frame. They come back and retest it very quickly. You see again, bearish inside bar. Look at the bearish inside bar. The market taps the line again, and then you get another good trade entry here. Let's look at Euro USD quickly. Euro USD looks a little bit more messy, but it's the same. The market is trending down. So we are following the logic of the trend, right? And we can see clearly that on the Asian session, we had these first opportunities. Let's focus on the London session. London session again, market comes. We can see the structure is lower highs are being created, grab of liquidity, break of structures right here. You have a nice entry. You can put your stop loss here, and then you can get this nice risk to reward, right? And then, yeah, GBP USD is going to be the same. So GBP JPY. Anyway, guys, I don't want to stay long, but that's what I wanted to share with you guys. I think it can be it's a very useful tool. Like I said to you guys, like this understanding to me break of structure, the way I'm explaining it, is still new to me. I was able to get this understanding, I guess, by God only, because every knowledge belongs to God, right? Like I said, end of December, beginning of January. So I'm still processing how to the best way to do it, right? Because I like to get close to perfection, even though I know I'll never be perfect, but just the idea of perfection is amazing. So um, that's why last night I was able to update the indicator so that it can give me this type of levels, because I want to get better at execution. I want to get better at risk to reward. I want to get better at managing my trades. And I don't need a lot of trades in a day, right? The idea is to get 1 or 3 trades and then call it a day. But I think this is going to be a game changer if you actually understand what I just shared with you, how to look at it. If you have any question, don't hesitate. And thanks for watching. Thanks for your time.